Siddhartha Khemka is joining in. He's the head retail research at Motilal Oswal Financial Services. Siddhartha, hi, good morning and thanks for joining in. Earnings season officially kickstarts today with TCS's numbers in the evening. But which are the pockets that you're looking at? Where are you most bullish on in terms of earnings this season?
Yeah, good morning, Sonia. Good to be on the show Friday morning. So if you look at the overall earnings for the quarter, after a very high base, we are expecting a stable quarter. The business updates have started coming in, which is kind of showing a healthy picture for Q4 as well. But on a high base for Nifty, we are expecting earnings growth to be around 6% for the quarter. But if you look at for the entire financial year FY24, that would take the earnings growth at around 21%, which is highest in the last 2-3 years. I think that's a big growth that we are seeing in the 9 months itself. The growth is in excess of 25-26%. And going forward, the earnings growth is expected to be in the range of 16 to 18%, again on the high base. As we see, the margin expansion is already behind us. And from here, we are expecting margins to consolidate. We are already seeing some of the commodity prices again inching up towards the end of the quarter, and which should keep the margins kind of a bit on the stable side. If you look at sector-wise, a few sectors which we believe would drive growth is autos, about 15% growth, financials, about 20% growth. Then we have healthcare, which after a very long time have started delivering good growth in terms of our aggregate number for healthcare is a 33% earnings growth, followed by cement, 32% earnings growth. Some of the stable, or you can say flattish growth that we are expecting from consumers, about 7%, capital goods about 5%, and technology about flattish growth of about 4% on a YoY basis.
Okay, all right. Hi, Sid. Good morning and good to see you in. Well, what about the commodity space? If you could give us your view on anything you like out there. And I think you all chose another way of playing this commodity theme, MCX, which has also done well. Tell us more.
Yeah. Hi, Nigel. Good morning. So if you look at commodities, I think from a earnings perspective, this quarter on a high base plus on a high base of margins, we are seeing a decline. So roughly about EBITDA decline of about 12% and PAT decline of about 26% for the metals that we cover. And prices have come down in the domestic market, be it the HRCs, the CRCs or the rebars. And margins are also kind of taking a dip, and because of which we are already seeing the sector was under pressure. However, as we speak, metal prices globally has started inching up. The outlook on China growth has started improving, which is supporting the overall metal space. And in that, we are looking at MCX, as you rightly highlighted. One of the other ways to play the space is MCX. The company has been launching new products. Recently, it has launched steel bar futures to play the metals apart from gold serial contracts as well as power contracts. Power is another space where we are seeing a lot of demand. And going forward, once the daily turnover for these futures reach a critical mass, the company would also launch options for some of these newer commodities. What we had seen in the past is that they were involved in a software transition issue with 63 moves to TCS, which is now completed, and the management's focus is primarily now directed towards scaling up of these new businesses. We see the gold prices, silver, crude prices inching up, which would only help improve the growth for MCX. So what we are expecting is that from here on, a revenue growth of 28% and a PAT growth of 157%, largely fueled by a 45 to 50% growth in options volume. And hence, we believe compared to the other capital market stocks, which we continue to remain positive on as a theme, MCX does offer a lot comparatively cheaper valuations to a BSE, and hence we believe within the exchanges, MCX can do good from here. So we upgraded the stock to buy recently with a target price of 4,300.
And hopefully they keep sort of coming up with new products, right? Sort of futures, etc., options on newer and newer commodities. That's the bet here. Sid, hi, morning. On Wednesday, one sector which came out of which did very well out of the blue was chemicals. Aarti, and there was Jubilant Engraver, Navin Fluorine, actually many names. It was a long list of UPL did well. So it's a kind of a underperforming sector. So interest, people have been on the lookout. When will things turn? It's not turned yet. But anything there, Sid?
Yeah, Prashant. So I think there's a pure case of bargain hunting that we are seeing in the market because results for specialty chemicals are expected to remain weak. Margins are expected to remain flat. Prices of some of the organic compounds, for example, you have butadiene, benzene, were flat on a Q-on-Q basis. Some prices have marginally increased on a Q-on-Q basis, but that doesn't give much leeway in terms of the pricing or realization improvement. So for overall our specialty chemical universe, we are expecting a sales decline of 9%, EBITDA contraction of 25%, and PAT decline of 38%. But I think all these numbers are already priced in the stock prices, and as you rightly said, people are looking for turnaround or improvement in the growth, which we believe could be 1 or 2 more quarters of away. And hence, while there could be some bargain hunting, people should continue either stay with the larger names like a Deepak Nitrite or an Aarti Industries, but some of the other niche companies, I think, with the weak results, could continue to remain under pressure for at least 1 or 2 more quarters.
So that this entire consumption space has picked up in a big way, right? Whether it's travel, tourism, delivery platforms. So Interglobe, Indian Hotels, United Spirits, Zomato, all at fresh highs as we speak. Any of these stocks where you expect incremental gains to happen here on?
Yeah, Sonia, so if you look at the overall consumption theme, is moved from the staples to the discretionary, and which is where a lot of demand has been pretty strong. And if you look at even for the last, I think, a couple of years, the urban versus rural, the urban has picked up pace, and which is where a lot of demand, strong uptick has been seen. So clearly, if you look at within the discretionary space, something like a jewelry, which we have been very bullish on. So Titan is a stock which we like within that space. From the overall hospitality segment, we have been very positive for the last couple of years. Both Indian Hotels and Lemon Tree continue to figure among our preferred picks. And one special stock which now is consistently coming into the radar is Indigo. If you look at how the realizations have moved up, and despite the global uncertainties, crude oil prices has remained stable, which is a big cost for any aviation company. And you have seen the consolidation within the airline industry, some of them recently also reducing the capacity. So Indigo continues to gain share, and we have seen Q3 reporting a very strong, highest ever profits by Indigo, which we believe for the Q4 as well as Q1 would continue to report strong numbers given the healthy season, travel season for both corporate as well as the leisure travel. So these are some of the names within the broader, you can say, discretionary spending. Companies which would continue to benefit.
Sid, just a couple of more sort of names your way. United Spirits saw a big move. UBL, that is a beer company, that one has also done well. Although on Wednesday, the big mover was McDowell, United Spirits. Any thoughts here, briefly?
Yeah, I think these companies, the numbers are not coming that strong, and they had been underperforming for a long time now. So we have United Beverages under coverage, but we have a sell rating there, primarily on back of the lower growth that we are expecting, and the high PE we have. Again, within the election time, we'll see a lot of prohibition talks and those kind of things, which could impact the sentiments negatively. Although in the interim, there could be some jump in the volumes, given the strong the temperature soaring. United Brewery especially gaining a lot of share, at least in this interim. But overall, on the longer term, we don't have a very positive view. Even United Spirits, we have a neutral rating. Again, growth is something that is not that exciting. They have been struggling within the product mix, and the last few quarters they have kind of realigned some of the products between the premium as well as the other segments, and that is helping them. But for now,
Sure.
we don't have a very positive view.
Okay, so that we leave it at that. Have a good day and a good weekend. Thanks a lot for joining in.